but at least people are doing the math, and the math is secondary if people have confidence in the system. But as soon as they lose confidence in the system, that's when things collapse. That's when storing something in your mattress is better than keeping it anywhere in the world, according to a lot of people. And that's when the system stops working. So not that I want it to happen. I'm just saying the probability of it happening has never been greater. Putting it all in perspective, coming back and forth, Bitcoin is stupid cheap. In fact, I think it's trading at about 1/1000th of what it should be trading at. But I'm only Greg Foss. Credit default swap markets on sovereigns right now are sickly. Oh my goodness. They are widening in lockstep with every, increased fear in the market. And here's two things that I'm going to warn people about. Deutsche Bank and Credit Suisse First Boston. As we always have to look at their credit default swap. Credit Suisse First Boston is the Lehman Brothers of 2022. Oh, don't worry. Everything's well contained. The market cap of Credit Suisse First Boston or Credit Suisse is $12 billion. It's a rounding error. It's like, see ya, $12 billion? The global debt markets just lost 40 trillion. And here we have one of the largest banks in the world with a market cap, that being their risk absorbing capital, equity capital, is worth $12 billion. That's a joke. And it gets worse. Deutsche Bank is only worth $18 billion. If Deutsche Bank goes down, Germany is fucked, okay? And together, 12 billion plus 18 billion is 30 billion. What was the Luna Terra market cap? 60 billion. Luna and Terra were twice as big as two of the most systematically important financial institutions in the world today. It is over, people. Your fiat Ponzi is collapsing right in front of your eyes. You better figure out where you can find insurance with no counterparty risk. That's why I'm bullish, because people will ultimately figure out that Bitcoin is insurance on the fiat Ponzi. Oh, and the best thing, there's no counterparty risk. It's not like buying insurance from AIG when you're Goldman Sachs and then realizing, oh my God, if AIG fails, all the insurance I bought from AIG is worth zero, and therefore I'm going to fail as well. So understand that the world is waking up to credit default swaps. The world is waking up again to contagion risks. The contagion to the world of two institutions that are worth 30 billion US dollars must be 100-fold that. In fact, it's probably the equivalent of 3 trillion. So it's 1,000-fold the size of their equity capital base. Oh my friggin' Lord. We are in a heap of trouble in the fiat Ponzi. But don't worry, Jamie Dimon, you were right. Bitcoin is rat poison because fiat is the rat. I said this most importantly. I've never been more nervous than since the great financial crisis, 2008, 2009. This is not a drill, people. The Fed has lost the plot, and there will be a lot of people that pay the price for incompetence at the highest degree in the most important risk chair in the world. And that there will be people, particularly young kids around the world, that pay the price. Unfortunately, mostly in developing nations where, the US dollar wrecking ball is destroying economies around the world. Banks are regularly insolvent, and it doesn't help when Germany, which is the only thing really holding together the European Union from an economic basis, falling quickly. Their economy hasn't grown really in 5 years. They have the challenge of the energy crisis over there. And people just got to be aware. Don't get over your skis, people. This is not a drill. It's not a time to be brave. It's a time to stack sats, disciplined, but don't go all in at any point in time. Keep some powder dry and get ready. And just when you think you're timing the bottom of the market, guess what? There's another huge leg down. and everybody is running for the exit. Because when you're managing a hedge fund and you get a margin call, meaning you have to raise cash, you don't sell what you want to, you sell what you can. And that basically ensures that the spiral continues. So it could get ugly. I'm still of the opinion that there will be a notional pivot by the Fed. Why? Because the math doesn't work any other way. It will destroy the economy, which will ensure the debt spiral accelerating, because tax revenues will fall off a cliff. This is the reality of it. I hate to tell the truth. If the truth hurts, go cry to your mommy, because not enough people are telling the truth. So the reality is the US is in a privileged position of when the US dollar strengthens, it doesn't hurt the USA per se, and in fact makes foreign imports cheaper because your currency will purchase more. But it's very insular because what it's causing is problems around the world, particularly with debts that are owed in US dollars. It makes a foreign borrower who has borrowed in US dollars have to pay more of their local currency to come up with the same interest payment to meet the contractual obligation on their US dollar denominated debt. It could happen suddenly, and chances are that the next financial crisis could be the last financial crisis. But I'll throw out some optimistic pessimism there. There's an author that I've been following for probably 20 years. His name's John Malden, who in 2011 wrote a book called The End Game, where he was basically calling for the imminent collapse of sovereign nations based on their debt spiral 12 years ago. You'd think that people would finally be getting the message. They are. It's happening when you get Jeremy Siegel up there pitching, berating the Fed for being a bunch of children. And then you get these debt spiral calculations that, even Shifty Pete is out there. He's finally figured out the debt spiral and how that might impact gold. So he's trying to use it to that narrative. But at least people are doing the math. And the math is secondary if people have confidence in the system. But as soon as they lose confidence in the system, that's when things collapse. That's when storing something in your mattress is better than keeping it anywhere in the world, according to a lot of people. And that's when the system stops working. So not that I want it to happen. I'm just saying the probability of it happening has never been greater in my financial career, because the numbers have never been worse. And the information is getting disseminated by smart people. It's a possibility. There is no question that a central bank that prints its own money can hedge by shorting. When I say hedge, they can short an infinite amount of cash settled futures on the CME and then fund their potential losses by printing more money to keep shorting and suppressing the price of Bitcoin on a cash settled futures market. That's markedly different than shorting Bitcoin, where the fixed supply of 21 million and assuming that the borrow function works properly in the physical market. You can only borrow so much Bitcoin. In the cash settled futures market, there is that potential. No question. Is it happening? My belief is certainly a degree of it is happening, but not by a central bank, probably by other Wall Street players that are trying to correlate Bitcoin as a risk asset to other risk assets. And all of this is possible. All I will say is just keep an eye on the open interest in the Chicago Mercantile Exchange to see if there's a really big player that's out there. Meaning, I hate to say it, but yeah, maybe the Federal Reserve. How do you defend against it? Education, promoting Bitcoin actually as the solution to the fiat Ponzi, where you could get the USA to have the intellectual property of Bitcoin residing in the United States so that they could use Bitcoin essentially as a, call it, security against the US dollar. I would argue, and this is what a lot of people forget, it could also be pushing the price of Bitcoin up at certain times as well, when the speculative fervor comes in and they use a cash settled futures market to air quote, own Bitcoin rather than own the physical. And people always forget that side of the equation. If the Luna Terra debacle had happened and there wasn't a cash settled futures market with a lot of open interest outstanding on the short side against Bitcoin, my belief is Bitcoin would have fallen far further than it did during UST, Luna, Elon Musk coming out as a seller, Celsius debacle, all those other things that caused risk in the Bitcoin ecosystem. If you didn't have a short base, it would have just fallen off a cliff. Putting it all in perspective, coming back and forth, Bitcoin is stupid cheap. In fact, I think it's trading at about 1/1000th of what it should be trading at. But I'm only Greg Foss. If I happen to still work at my hedge fund where we had, $5 billion to invest, and this was a while ago, maybe the price would be a little higher because I had $5 billion to invest, not like 5 wooden nickels like I have right now. It's just a different world. So it'll come. Be confident. And by the way, it is positive that the price of Bitcoin is low because people in the world who really need to buy it at this price are able to get a larger chunk of Bitcoin for the same fiat dollars invested. I'm talking about most of the people that live in the less privileged countries of the world, not North America and not United Kingdom, okay? The people in the world that really need it, whether it's El Salvador or Obi's project in Africa, Joe, this is why you can be sort of happy that the price of Bitcoin is at levels that I view to be insanely inexpensive. Let's put it that way.